I want to take a few minutes just to walk through the financial projections model. Sometimes when people hear financial projections, they get all unnerved and they kind of freak out a little bit. And one of the things that we want to communicate is that if you can add, subtract, divide, and multiply, you have the skills that it takes to do this financial projection model. Now, again, this is a basic model. What we're trying to do here is to get people comfortable with one, a spreadsheet. Two, we really want to help them to understand how to think about the inputs that go into financial projections. Many business owners kind of pull numbers out of a hat. And they don't have alignment between their revenue and their expenses. By walking through this spreadsheet, you really would not believe the kind of aha moments they can have. Just having someone to push back on the numbers a little bit, ask them questions. How did you come up with that? Well, if you have that level of revenue, are there other expenses associated with that that you need to think about? So that is really the objective. Yes, we want them to put real numbers in. And it's okay if they do have to kind of pull numbers out of a hat for this particular exercise. It's most important for them to understand how to get the numbers, how to think about it, so that when they go back with more information, they actually know how to enter the numbers and then, how to think about what they're seeing. So what we're going to do is start on the first tab, the cost of goods and the gross margin. And keep in mind, the other thing that we want to help them to do is to understand where to enter numbers on this particular spreadsheet. The data entry goes into the yellow cells. So we've tried to make it really easy. If it's not yellow, it's a formula, so leave it alone. And of course, they can adjust the model, if that's something that they know how to do, or if that's something that you can help them to do as you're working through it. But, we want to keep it basic. So first thing is you're going to enter the different revenue streams here. So we might have, let's say, event income. We might have shirt sales, something like that. All right, you get the point. So that will actually end up transferring over to this sheet here under sales projections. So going back here, you want to just walk them through this and how to think about cost of goods, the cost of what it is they are selling. So here you're going to put in the price of 1 unit of sale. And let's say that's $20. And this is $5. And enter the unit of sale. So is this per event? This might be per shirt. And then what does it take to actually make that? Again, this is very simple. So you're going to just put in here, what does it take to make that product or to deliver that service in the case of service? So here, maybe the raw materials are, $3. Actually, that would probably be higher, but anyway, you get the point. And here this is $1. And so you see how that drops down and you get the total cost of goods sold here. You have your price that the customer is paying here. And then we go to the sales projections, and that has populated on this sheet. Now, again, one of the things you want to do is to walk them through this list and make sure that they're really thinking about everything that it costs to deliver that product or service. So then you go over to the sales projections And what you're going to do here, so you have your cost per product here, your cost per unit rather here. And in these yellow cells, you're going to enter for each month, how many of those units are you delivering? So maybe they're having 10 events per month. And then here they're selling, 100 shirts per month. And then you go through and populate that here. So maybe it's 10 all the way across for the first year. And, maybe here this is increasing or so. So 120, 130, you get the point. So you see that those numbers are automatically calculating here. So both the revenue projections and the unit costs here. Now, you finish doing that. And here, I want to point out that we break this down month by month because there could be fluctuations. Maybe there's a particular month where you expect sales to dip or you expect sales to be higher. Or you're selling more from month to month. But we want to make sure, in this example, I just did a straight line, but you really want to help them to be thoughtful about month by month, when is it that they may have sales increases or decreases that are just seasonal. Now, all of that then transfers over to this profit and loss tab. And you see here we have the revenue, we have the cost of sales, and then we get the gross margin. One of the things that you also want to do here is to explain these terms to them and explain what these terms mean and help them to understand that here, if they're seeing a negative number here, which yes, believe it or not, we have seen that happen. If they're seeing a negative number here, that's not a good thing. Or if this is too low, not a good thing. So, you then want to go back and help them to understand how some of their assumptions about their revenue and their costs need to be adjusted. So you leave that alone, that's already populated. You go to these cells here, and this is simply, what are the operating expenses? We have some of the standard sorts of things in here, but again, make sure that they are thinking through the different inputs, the different expenses rather, that they have for their particular business. We see a strong tendency to underestimate these different costs, especially payroll expense. And again, we're not trying to be super, super comprehensive here, but realistic and in the ballpark. So make sure, when they say payroll and they say, my payroll is $200 for the month. Well, is that going to be the level that you need in order to produce the sales that you're anticipating? Are you doing enough marketing and promotion, or any marketing and promotion for that matter? They may not be doing it now, but they have to project what will they need to do in order to drive that level of revenue. So walk them through this sheet, these yellow cells, and help them to think about all the things that are required as far as their operating expenses. And just explain these calculations. We have it easy, pretty easy here, that this line is A minus B. Again, we want to help them to just get comfortable with these calculations and what they are. All right. And then the way that this shows up here is that it totals for the year for each 12-month period, so they can see what the total is for the year. All right. And that's pretty straightforward. And what they can do is they, if they then wanted to, use this model rather to create just an overview of their financials, explain that really they can just use the totals as a summary. All right, so I think this is pretty straightforward. This goes out 36 months. We want to do that pretty much anything more than 36 months is just guessing. But this way it will help them to see what the trend is. And again, if they're looking down here and their operating profit is negative or too low, they need to rethink some of these inputs. Also, make sure that they are including themselves. We see a lot of business owners that, they finish the spreadsheet and you ask the question, where are you in this? And I say, oh, well, I'm not paying myself. Well, what is the point of doing a business if you're not making any money? A lot of business owners forget that. So, it might be hard for you to believe, but we see it. So make sure that they are including themselves, even if that is, that their number will come out of this operating profit. They have to make sure that the operating profit is sufficient to cover their personal financial requirement. And so then we go to the sources and uses, and this might not be relevant for everyone. And if you don't have time to really get into this so much, that's fine. Just, explain a little bit that when you're starting a business, you actually need to have some money to start. Or if you're going to grow, maybe there's an investment in the business that you need. And so here, this is simply, what are the things that you're going to use money for? If you are asking for a loan or if you're raising capital through equity, which many of the business owners that we're talking to at this point are not raising equity capital. It would mostly be a capital in the form of debt. So what would they use the money for? And they need to be able to explain that. The other thing is, this line here, working capital, comes from this profit and loss. And you want to look at this, if it's negative for a period of time because they're starting up or they're going through a period of growth, and this number is negative, that money has to come from somewhere. So that would be where you would look at the working capital requirement. Here, it's, again, if they're going to go to a bank or some source and get a loan, you can just put even here, loan one. It's not necessary to know exactly the specific source. And you might put that this is, $20,000. Here, this equity, how much is the business owner going to be putting in? If it's zero, it's zero. If there's other equity, maybe a friend or family member is investing, oftentimes that is zero. It's whatever the loan is and their personal savings. And again, here, whatever the uses of capital will be, that's what you're putting over here. And I think that's it. This is pretty straightforward. You would not believe going through this, again, how beneficial this is for the business owner. So while this may seem simple to you, realize that in walking through this, you are really making a big difference for that business owner. So thank you for your expertise and your time and the difference that you are making for a small business owner.